Money Multipliers! Welcome back to another episode of the Money Multiplier podcast. I'm your host, Hannah Kesler, and we ask ourselves, do our dollars make sense? I am joined by the one and only Mr. Larry Steinhouse here in wonderful Acapulco, Mexico, baby.
It's so awesome. It's so awesome to be here with you. It's so awesome to be here in Acapulco. And it's so awesome to be on your podcast. I love this.
Yeah. No, and Larry and I do a lot of work together. So if y'all been hanging around the Money Multiplier community for some years, you know Larry, or you may have even met me or Brent through Larry Steinhouse. But we have actually hosted.
You guys, some people have met you through me.
Yeah. And so we have actually hosted. Isn't that what I said? Or did I say it backwards?
No, I don't know.
But we both have very severe ADD. All right, welcome to the show.
Wait, I'm getting old, I think.
We actually hosted two events together, both in Tampa, Money Game Live. So we did 2025 and then 2026 this year. Mm-hmm. And then we got some ideas of what we're going to be doing coming around next year, 2027.
Yeah, 2027 and 8.
Yeah. And what we want to do. So leave a comment down below if y'all are wanting some education or, materials, and you just really want to dive deep into your financial life, because as you said on your radio show, okay, you've been hosting a radio show for about 8 years.
Yes.
Is that right?
Yeah, correct.
And the first half of the radio show, it was called Investor Schooling
Live.
Live.
And I changed it to the Larry Steinhouse Show.
And why'd you do that?
Because financial topics are boring.
They get boring.
They're so boring. After 4 years, I was like, if you put your money away at 7% a year, after 10 years, it will double. That's so boring, isn't it?
It is. And you gotta make it entertaining. And that's why actually Larry and I are doing some personal development so that we can be better communicators, we can be more expressive, make it entertaining and fun, because it doesn't have to be boring. You just gotta make sure that you're conveying the message appropriately so that the other person is understanding it, but how do we do it in a fun way? So that's what we've been up to here in Mexico.
Well said. What did we discover, Hannah?
What did we discover?
What did we discover that we should teach people?
Today,
yesterday.
I think, to me, what I've discovered in my whole journey of wealth building is money's not wealth, but money is simply a tool. A tool for me to have freedom, to have autonomy over where I want to be at, how I want to spend my time, and even who I want to spend it with. And I'll tell you something else I've been going through in my life right now. Growth in the aspect of not just money, but people and relationships.
Oh, that's interesting. And that's really important. I agree.
And that's something that they don't teach us in school, is it?
No, definitely not. Right. They don't teach you much in school anyways.
Do they teach you on the Larry Steinhouse Show?
Do we teach what on the Larry Steinhouse Show?
To outgrow people. What do you gotta do when you gotta outgrow people? How do you tell someone you don't want to be their friend anymore?
Hannah, you're lovely, but I just don't want to talk to you.
I gotta go.
No, I'm only kidding. Actually, I would never do that to Hannah because I love Hannah. But I don't know if you have to tell people that.
Yeah.
So what does happen, and it's talked about all the time, right? You become the 5 people you hang around.
Yeah.
So now you want to level up, and the people you hang around now are not the people that you want to be like.
Yeah. You should outgrew them.
You outgrew them, right? And you're going to gravitate towards new people. And I'm doing it. Hannah's doing it. Hannah's doing it at 26 still.
Yeah. I'll be 27 in 2 days.
Well, happy almost birthday. I mean, it's amazing to me that Hannah has realized this at this age. However, what I was saying was you start to outgrow some people and you make new friends. Now, you don't go to your old friend and say, listen, I don't like you anymore because you're just not the kind of person I want to hang around with. It doesn't happen that way. What happens, it just naturally happens. You naturally don't spend as much time with them. It's not about I don't like them anymore. It's just they don't fit your needs anymore. The conversations are very different. The conversations that I have with people are so different than the conversations that when my family comes over and they're talking about things I have zero interest in. I mean, they're talking about the latest movie. They're talking about the football game. Now, it's funny that I don't like football. My wife likes football. So they'll be talking about that. And I have very little interest in those topics, so I don't talk to them about it. But when I go to an event like this and I hang out with Hannah, we're talking about money. Now, money, of course, is one of my favorite topics. I enjoy it. It doesn't mean that it's the only topic, because I'm not that shallow.
Yeah.
We talk about development. We talk about helping each other and helping other people. That's what we do, and that's what we talk about, and that's what we really enjoy talking about. So again, don't worry about telling somebody, hey, I just don't want to hang around with you anymore because you don't fit my needs anymore. It's not reality. Just start reaching out to new people, and you'll expand your friends. Now, the interesting thing is, one of your friends from their past comes back to you. They just say, hey, listen, I want to hang out. I want to have a beer. Absolutely, go have a beer with them.
Let's catch up.
Yeah, there's nothing wrong with it. You should be able to keep in mind these people who shape your life.
Yeah, that's a good one. But I know that wasn't our topic we're here to talk about today, so we're going to go back and talk about money.
Let's talk about money. I like money.
Hey, but honestly, shout out to the Larry Steinhouse show. It's a good show. It's a radio show that happens every Saturday from 1 to 3 p.m. Eastern Time. You can catch it live on Facebook or tune in. I think it just streams locally, right, in the Philadelphia area?
So it's actually a radio show. So it airs. So it airs on WPHT 1210 AM. And you can actually just go to WPHT 1210 AM on the internet, and you can actually listen to it there anywhere if you want to. You can also watch it on the Facebook page. Now, the Facebook page has the video, so you're actually watching myself and my two co-hosts do this show. Now, just real quick, I have to tell you something funny about this show. I mean, literally, if you took Howard Stern and Jim Cramer and put them in the same body, that's this show. It is hysterical. We will be going, and I mean it, we'll be going from talking about women's underwear to talking about your IRA.
Yeah.
Now, you may think that's weird, but when you listen to the show, you'll see
It
how
makes
it's
sense.
not.
Yeah. In your show, so people call into Larry's show, okay, to give y'all context. But in your show, how many people are calling in because they found themselves in a financial emergency that they don't know how to get themselves out of?
Yeah, so that call, among others, is one of the calls we get. You know, I don't know what to do. This and that happened. Hey, listen, I need new tires for my car. How do I find the money for new tires for my car? And it's funny because they think that I can answer that question. Now, if they have not prepared for that situation, there is no answer. It's just hang out, wait for something to happen, and maybe you're going to get the money. Maybe you can borrow it. Maybe you can, I don't know, if you happen to have a credit card, great, but most likely these people are calling and they're not calling. They don't have a credit card. So now they're stuck and there really is no answer. This is why you must prepare for these circumstances.
How should somebody prepare? Okay, because here's my feedback on it. I mean, step number one, y'all, you hear me say it all the time if you tune into the podcast show, you need to track your stats and you need to make it a priority for yourself. You wouldn't believe, I have one individual that literally responded back to me and said, I don't have time to look over this. I don't have time to look over my bank accounts, my cash flow. So I just can't do this right now.
Yeah.
Do you get those people a lot too?
I get people like that, yes, and you gotta understand.
It's not a lot.
These people, right? These people are more interested in the TV show, the stats of their Eagles football game, in the case of my family, and instead of their money. So great, now they know every single player on the Eagles roster, but they don't know how much money they have. They don't know what to do if there's an emergency.
It's important to them on fantasy football, though.
Yeah, exactly. Exactly.
No, but honestly, my first goal and guideline that I would give y'all is seriously track your stats. You need to understand your income that's coming in, your expenses going out the door. If you do tune into my Money Mornings with Hannah, we have gotten deep into that about how I personally track my income, my expenses, and more importantly, what I look at is how much am I keeping at the end of the month.
And some people call that a budget.
Some people call it a budget. I don't like to use the word budget.
I can see that. I actually noticed you were avoiding it intentionally.
The reason being is because it has this negative energy towards it, where people feel like it's a chore and then they just won't do it.
Yeah, exactly.
So I'm on a hunt to try and figure out a better.
It takes the other word that nobody likes.
Which is?
Discipline.
Yeah.
I don't want to be disciplined. Well, you have to make good habits. And some of the good habits are saving your money, putting your money somewhere that makes sense. Not in the local bar. Not to buy things that you don't need.
Like an upgraded car? You don't think that my car that I'm leasing right now is good? I wanted another one. I'm going to upgrade.
Well, you can upgrade if you'd like to, as long as you can afford to upgrade without it affecting your lifestyle. That's the key that people don't understand. They're like, oh, well, I'm paying $500 a month now for a car. I'm going to go trade that in, get into debt more, buy a car for $60,000, be underwater in my car $10,000, so I have to borrow $70,000 to buy a $60,000 depreciating asset, and my payment will only be $950 a month. I can afford that because I can afford that?
Yeah.
That's stupid thinking.
Yeah. Well, no, and to that point too, specifically when it comes to the infinite banking concept, a lot of people will look at the cost. What is it going to cost me on a monthly basis? And does that cost monthly fit into my budget? Where how I look at things, I imagine how you look at things, is what is the total cost of that purchase? Okay, if I'm going to go buy myself another car, sure, could I afford another $950 payment every month? I could maybe afford that on a $60,000 car, but after those 4 years, 5 years that car loan is issued to me, what is that total cost of the vehicle? Is it really just a little bit over the 60,000, or is it a whole lot more? Is it really going to cost you 70 grand just to buy that car because of the volume of interest that you sent out to somebody else?
Or the time value of the money that you use to pull it out of somewhere to buy it cash.
Yeah.
And that's worse. Taking $60,000 out of your investment account and buying a car cash is worse than financing the $60,000 at 7 or 8% interest.
Through a bank.
Through a bank, yeah.
Yeah. Or you can level up, all right, because you know, your money has to be stored somewhere, right? And the whole topic that really what we wanted to get into was, are you prepared for the times of the unseen? When the transmission goes out, your appliance goes out, maybe a contractor calls, or you got a tenant and there's a toilet that needs to be replaced, or a big leaky roof that's happening. Where are you holding those reserves at? And in my opinion, this is why I store that wealth inside of whole life insurance. Whole life insurance that's properly designed for high immediate cash value. Because this is a place where I can store the money where it's liquid. Because I don't know about you, are there other accounts out there that, yeah, maybe it's liquid, but can I access it without penalties or fees?
So they're called bank accounts, and you can get an entire amazing amount of like 1% interest.
Yep.
I mean, who cares? Why would you want to put your money there?
Hey, sorry to interrupt the episode here, but I want to take a quick break. If what you're hearing today has made you curious about infinite banking, how it works, I want you to go watch my free presentation. In it, I walk you through the same steps that my family took to pay off $984,000 of debt in 39 months, and how we've been able to recycle and recapture every single dollar since then. This isn't theory. This is real. I mean, this is what the wealthy have been using over 200 years to keep the money within the family. This is literally where banks, conventional banks, store a boatload of their dollars at. And it's the same process that we've helped thousands of families across the country put into action. So go to themoneymultiplier.com/presentation and see for yourself how you can start taking control of your money today. All right, let's get back into the episode. And when you take your money out of that bank account, now you stops that less than 1%
The 1% interest, I'm going to lose it.
That's right. And then, is your bank account protected?
Protected in what way? I mean, it's FDIC insured, but so what?
So what? If you really think your money's backed up by the FDIC, we got to have a come to Jesus meeting right now.
Well, I number one, don't care, because I keep nothing in my bank accounts, right? And number two, I don't think we're going to have an opportunity to test it, so I don't really care.
Yeah.
But if you have 250, what is it? I think it's now 500,000. If you have $500,000 in a bank account, you have much more to worry about than whether that money is insured by the FDIC. You know why? Because you have foolishly put your money somewhere in a terrible place.
Yeah, but it's just what we've been trained and conditioned to do, right? So instead of me leaving my wealth in those other places, I'm going to keep my wealth inside of my policies where it is accessible, it's liquid, I can use the money for what I want, when I want, and then when I need to go spend it on an emergency that comes up, I'm able to access that money, go pay for the $10,000 expense, let's say it's a medical bill, but at the same time, my $10,000 never left my pocket. I'm still earning guaranteed interest and dividends. Not guaranteed, but hey, we do sometimes earn dividends in our policy inside of that policy compared to if I just withdraw it from a checking account or even a loan for my 401k.
Sure.
Right?
Yeah, I gotta tell you, so it's interesting. I was actually teaching class the other day at Investor Schooling. I was teaching a class about what I call buckets. And when you make money, you need to put money into buckets. Now, of course, the most important bucket is the first one, which is you. But now that you bucket, and maybe it's 10% of your income, maybe it's 20%, I don't care what number it is, but you take that bucket and you need to put that bucket into other buckets. So we talked about putting money into life insurance. We talked about putting money into precious metals. Honestly, we even talked about putting money into Bitcoin. Don't put money into Bitcoin until you have money in life insurance, silver, and stock market. Bitcoin is extremely risky, and I would tell you to stay away from it until you're prepared to put it in a place like Bitcoin. Anyway, getting back to that, one of the buckets that I highly recommend, again, is life insurance. Why is life insurance a great bucket? It has so many incredible benefits. Now, I know you teach these all the time, so I'm not going to go through them. I mean, besides the tax benefit and just the fact that the life insurance alone is a great benefit.
Yeah.
And the fact that you can access it any time and it makes money all the time. This is something that for years I thought was the most amazing product out there. Don't you agree?
Oh, that was it?
Yeah, I know. I didn't know where I wanted to go with that. I was like, okay, it's the most amazing product. I should have said, it's the most amazing product out there.
No, it is. And honestly, like how we opened up even this show here today, I sometimes get bored talking about whole life insurance because it's that plain easy. It's that black and white. I mean, it's literally, hey, I put my money inside of this account. It's guaranteed to grow. I can use it for what I want, when I want, and government's out of my hair. Creditors are out of my hair. If I ever have the lawsuit or a judgment, because, hey, have you ever heard the saying, the higher up your ass is on the flagpole, the bigger the target it becomes?
Oh yeah, I'm worried.
So sometimes.
Hold on, I gotta move a little bit. Okay, that's better.
So sometimes I get even just bored talking about whole life insurance just because of how simple it is. But for the average person who's just learning about this, it's a total 180 way of thinking. So I guess, Larry, like when you're teaching your students about life insurance, where are they getting hung up at, and why are they not seeing it as easy as maybe you and I are seeing it?
So I find it interesting because I don't teach life insurance.
Yeah.
I teach the inner workings of the whole life policy. So they don't necessarily get hung up. It isn't until they find out that I'm teaching them life insurance that they go, wait a minute, isn't that guy on the radio, some other guy, you know who I'm talking about, who says, hey, you should never buy whole life insurance because I want to teach mediocrity and you should be mediocre like all the other people I teach. Never mind the fact that he's not mediocre and he does everything the opposite of what he teaches, which is amazing to me. But that's a whole other issue.
You gotta follow the money.
Excuse me?
You gotta follow the money and you'll know what people are doing.
Yeah, what's funny is the more people make money, the more these tools become important, right? You have to lease cars when you make a lot of money. You want to know what my car lease is right now? You want to know how much my car lease is right now?
Yeah, how much?
You ready?
Yeah.
$6,415 for one of my cars.
That's the mortgage payment right there.
Yeah, that's my lease payment.
Yeah.
Now, why do I lease this car? Why didn't I buy it cash? Why do I lease it? And why did I not just buy it? So the answer is because if I lease it, it has better tax advantages for me. You know which car this is, right?
Yep. His Rolls Royce.
My Rolls Royce.
His new Rolls Royce.
That's right. And the reason I lease it, and I could have bought it cash, I could have financed it through a bank. As a matter of fact, I went to my account and I said, which one's better? Now, I knew better than cash, because obviously cash is the worst one to do. But the lease or lease or purchase, he steered me towards the lease. He showed me that me leasing this car would cost me about half of that number. And that's still a high number, don't get me wrong. And you have to make a lot of money in order to do that. And I'm going to tell you right now, I do. And you can learn how to do all this, learn how to make the kind of money that I make, but you have to start somewhere. You have to start with the discipline. And one of the disciplines is putting your money through something like a whole life insurance policy. Putting your money into places that make you money. Then when you have all this money in your whole life insurance policy, I teach people how to invest it.
Yep. And that's honestly why we have a lot of symmetry,
Sure.
together, just because, I teach people, I don't teach people about investments. I'm not a financial advisor, I'm not a tax attorney, yada, 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 right? I'm teaching you on where to store the money at. How can you keep the money that you're already making? And then once you get to that certain degree where, hey, I got some capital here, I hear you, Hannah, you tell me that money is made in the motion of it, it's just a tool. So how can I go and put this tool to work to make money for me instead of me working for it? And then that's where Larry Steinhouse comes in, who can show you, hey, how about stock options? How about real estate investing? Gold and silver even,
Yeah,
right?
Sure.
So that's why we complement each other very, very well.
So here's a question, right? Check this out. Do you guys know what an accredited investor is? An accredited investor is someone who has $1 million net worth, not including their primary residence. Now here's something interesting about that, and it drives me crazy, so many things. If you have a house worth $1.5 million and it's completely paid off, and you have $100,000 in cash in a bank account, you are not an accredited investor. If you have a house that's worth $500,000 and $1 million cash in the bank, you are an accredited investor. Now, what does an accredited investor do for you? It lets you invest in things that other people can't invest in. You ever hear the expression, the rich get richer?
And the poor get poorer?
Yeah, well, the rich get richer is all I care about, right?
Yeah.
Because I'm not poor.
Yeah. No.
The rich get richer, right? And why do the rich get richer? Because they're given opportunities that poor people don't even have. Now, some poor people, they're missing the opportunities that they have, they don't even know. But rich people have opportunities they don't even have. So if you can become an accredited investor, the world of opportunity opens up so much more for you to make so much more money. Here's the trick though. Remember that guy who had the $1.5 million house?
Yeah.
And it was paid off?
Yeah.
And he was not an accredited investor? If he gets a home equity loan,
Then he is.
no, if he gets a home equity, let's say he gets a home equity loan for $1 million. And he writes himself a check and puts it in his bank account for one day. Mm-hmm. Is he now an accredited investor?
I would assume so.
Of course, because his primary residence doesn't count.
Yeah.
So it's odd that people teach people to pay off your primary residence. Now, look, if you have so much money and you have all these other assets, it doesn't matter. You can pay off your primary residence. But in some cases, it's not such a great idea to pay off your primary residence, or if it's paid off, it's a better idea to take a loan against it and use that money not only for other things like other investments, and that's how life insurance works. Check this out. If you have $1, right, and you put that dollar in your bank account, and then you go buy something with that dollar, you have to take it out of your bank account. What do you have left?
No money.
Nothing.
I got my product, but I don't got the money.
The cool thing is if you put $1 into a whole life insurance policy, you know what happens?
And
you
then I
can
take it out.
that dollar out. Actually, maybe you can only take 80 cents of the dollar.
Yeah.
You can take
In the
80
early
cents of
years.
that. Yeah, right. You can take 80 cents of that dollar out, and guess what you still have? You have $1 working over here, and this 80 cents over here to do whatever you want with. Now, here's what you should do with this 80 cents. You should invest this 80 cents. Because this dollar that's still here, believe it or not, that's the weirdest thing. Sometimes it's so hard to understand that the dollar is still here. You didn't take it, you actually borrowed against it. So this dollar is equity against this 80 cents. There's no place else that you can go and get a guaranteed loan against your asset. In fact, you go to real estate, and even if you had that $1.5 million house and your credit score is 550, no one's lending you the $1 million.
Yeah.
In a life insurance policy, no matter how much equity you have in a
You
life
gotta
insurance
qualify.
policy, right? Yeah, no matter how much money you have in a life insurance policy, you can take that loan and you can get 80, 90, 100% or more out of your cash value. It's amazing to me.
No, and you made me think of something because I I've always said it, but it really didn't sink in until I had to go through this process of getting a DSCR loan for some of my rental properties that I just bought. And obviously, like my father, mom, you know, they've kind of gone through the process and I've seen them walk through the process. But I have just never gone through that process of qualifying for a bank loan. And it was difficult. Like, they kept asking me for papers and papers and papers.
It's stressful.
And up to this point in my life at 26, I've never had to go and borrow money from a bank because I borrow from the family bank, aka mom and dad's policies, and then dad would charge me interest to use his money borrowing from the family bank, and then I would pay dad back, pay him back with interest. But I never had to qualify because, hey, it's the family, right? I never had to send him bank statements or show my net worth or my liquid cash that I do have.
Your credit score.
Yeah. So, oh my goodness, and even too, man, like when I went out and I bought my last car, the reason I even got a bank loan is simply to boost my credit history.
Yeah.
Because of being so young, they wouldn't even give me the car loan.
Really?
I had to have my dad co-sign off on it with me, even showing them all of what I was doing. They wouldn't give it to me because of my credit history.
You want to have some fun?
That's like no control. You know what I mean?
Do you want to boost your credit score?
Yeah, show me how.
100 points?
Yeah, show me how.
I want you to talk to your mom and dad.
Okay.
And I want you to tell them to make you an authorized user on their credit cards.
And their credit cards?
Yeah. What this means basically is they're going to issue a credit card in your name on their account. But if they never give it to you, you can't use it. But the cool part about it is, as soon as they issue that card, their credit history shows up on your credit history. So if they've had that credit card for 10 years, 15 years, 20, 25 years, right? Now all of a sudden you have a credit card on your credit score that's been around
a long time.
Almost as long as you've been around.
Yeah.
Or longer.
Yeah.
And it counts. It's the most craziest thing. It counts. So that's a great way to boost your credit score, and they should know that. And if they're not doing it, have them call me. I'll make sure they do it.
You know what that kind of reminds me of? Money hacks. Isn't that all what it's about? Is just finding out where are the money hacks at.
Yeah.
Because in my opinion, there's us and the wealthy, right? Us and the super wealthy, and we all have access to the same financial tools. But it's just how the wealthy are using the tools differently than us, the masses. And we're just not taught it. You have to go out and explore it on your own. Go down YouTube University or go
No, please don't go down
people.
YouTube University.
Or go meet people and see the life that they're living, and you just try to mimic and imitate exactly what they do. That's why you always hear me ask you, Larry, I say, hey, what mistakes have you learned? And
You want to know the biggest mistake I learned?
yeah.
YouTube. You know what happened to me last year?
No.
So I had an appendicitis,
Yeah.
and I decided to, instead of go to a doctor, I decided to go on YouTube to watch how to remove my appendix.
Shut up.
And then when they got to the video about, when they take the scalpel and you actually go and you cut, that's when I realized I was making a mistake.
Yeah, shut up.
But that's no different than so many YouTube videos.
That's
It
true.
amazes me they're telling you things that only we teach, that you should not learn how to do on YouTube. I mean, when I teach things like covered calls, for example, everybody wants to go to YouTube and go, I'm going to look up covered calls. Well, I'm going to tell you right now, if you do covered calls wrong, this is what I want you to do instead. I want you to get a pile of $100 bills. I want you to sit in front of a fireplace, and I want you to throw in $100 at a time. It will be more fun than you learning how to do this on YouTube by some guy who's been doing it for 3 months and thought it would be great to make a YouTube video about how much money he made in that 3 months.
Yeah. You gotta be worried about where you're getting the information from.
Yeah.
So honestly, here would be the action steps. I know it sounds so basic, but you have to do it. These are the steps that you cannot miss. It's almost like going to the gym or eating healthy, drinking your water. This is just stuff that you cannot skip. So number one, you gotta know your stats. What is my income? What are my expenses? How much am I keeping? And know where all of your money is going. From there, I would hold the money that you're keeping inside of a place where it is liquid, you can access it, In my opinion, it should be protected. I personally believe in whole life insurance. That's where I'm keeping the warehouse and the storage of my money at. And then from the policy, I will, number one, I want to save up first, right? Because I got to make sure that I have dollars for the rainy days. We don't know when it's going to come, all right? But it's going to come. You've had a lot of rainy days in your life.
Of course, and I'm going to tell you that I have a different philosophy on rainy days.
Tell
I
me.
really do. I don't believe that you should have a rainy day fund. I really just don't. Because what do people do with a rainy day fund? They put it in a savings account in a bank that gets less than 1% interest. And that's foolish to me. I'd rather have a rainy day fund called a credit card. Now, for real.
No.
No,
Okay,
I mean this, right? I'm not saying that you should be wasting your credit card on things like furniture and and trips that you can't afford. I'm saying that your credit card becomes your rainy day fund. And I know it's against everybody else's teaching, but I want you to take 100% of your money and do 100% good with it. Not have it sit in an account, just in case my water heater breaks, I have $2,500 in a savings account making no money for me. That's foolish. I'd rather you take that $2,500 and put it anywhere that's going to make you money. Life insurance is certainly a place. The stock market is certainly a place. Funds are certainly a place. Whatever you're going to do with that $2,500, do it. And when the rainy day comes, you may even be able to access that money. Maybe you can go to your life insurance and borrow against it and take that. But if you need that rainy day fund right away, you simply charge it on your credit card.
For sure.
And if you have a $2,500 credit card bill, then you know what? You don't have to pay it all the next month. You could pay $500 a month over 5 months, and it's fine. Don't let the fact, oh my God, I'm a credit card debt. Oh my God. Do you know how much money that I have available in credit cards right now?
I know you have a crap load.
$1.5 million. Right now, my emergency fund can rebuild my house, which is my credit cards. I can use my credit cards to literally rebuild my house if I wanted to, right? But luckily I have insurance, because if not, I'd be very sad. Right? So I'm saying, take your money, put it to work for you, and save credit cards for rainy day funds. Maybe you apply for a couple extra credit cards and you call the credit card. Literally take a pen, a shopping marker on the back. This is my rainy day fund credit card. Put it in a drawer and never use it. And then when the time comes, you know what? I have this card. It's got a $5,000 limit. It's got a $10,000 limit, and you go and you solve your rainy day problem.
See, and this kind of just proves that there's no one silver bullet out there for everybody, okay? That's Larry's philosophy. My philosophy is I store the dollars inside of my whole life policies. And what I actually do is I keep 3 months of expenses there.
That's great.
That's my rainy days, if shit hits the fan, emergency funds dollars. And I would even say too, like a lot of my high income earners, my people who are making 500,000, a million, 2 million plus a year, even y'all need some dollars set aside, because what if I got a big old tax bill that just hits me one day? Or I got, right? Or I have this big expense for the business, $100,000 I got to come up with like tomorrow. Where am I going to pull that money from? So yeah, could credit cards be a great way and a tool to use it? Absolutely. But I would argue for my people, the everyday average person, they ain't disciplined with the credit cards. They are using it for the everyday expenses, and they're not just looking at it as, oh, this is my backup, my emergency. And that's where it gets dangerous. And it all kind of really just comes back to the mindset and the discipline.
And it's all about discipline. It's discipline where you put your money, discipline what you do with your credit cards, discipline how you use your credit cards, discipline how you apply for your credit cards. I mean, I didn't get $1.5 million worth of credit on credit cards by not applying. I obviously applied a lot. Matter, I probably have something like 60 inquiries on my credit score. And then right now your audience said, oh my God, can you imagine how bad his credit score is?
I know.
And it doesn't work that way, right? The actual amount of points that you could lose by applying for a zillion credit cards is 55 points. It's the maximum amount of points you can lose. So if the highest score you can get is 850, guess what? My score will be in the 790 or 795 range. Who cares? You know what the difference between a 740 credit score and an 850 credit score is? Nothing. 110 points. It means nothing. You go to a bank to get a loan, and your 740 credit score is going to get you the same exact interest as someone with an 850 credit score. So who cares if your credit score is 850? In fact, I make fun of people on 850 credit scores.
Why is that?
Because they think they're so perfect. And I go, well, how much available credit do you have? I have $5,000 on a credit card I never use. Well, that's why your credit score is 850.
Yeah.
I have $1.5 million worth of available credit on credit cards, and I'll use my credit cards.
Yeah.
And my credit score will stay in the high 700s. Who cares?
Yeah. I think it's just the importance of being liquid, and then also just making sure that you are making smart choices with the monies and actually going and putting it to work how you say you're going to go put it to work. For some reason, people get cold feet, whether they invest in your fund or they're about to start their whole life policy, and then they say, oh, I'm just nervous, I'm scared, I don't know what's going to happen now.
I spoke to my broke neighbor who said, this is a scam.
I would just be better if I just take all of this money and just go and invest it into the S&P directly.
Yeah, sure.
And
they don't even know what that means.
No.
It's the funniest thing. The worst thing is when they go to their friends and their neighbors who are broke and they're asking them for advice. Listen, this Hannah Kesler, she's a 26-year-old millionaire and she's giving me advice on money, but I want to take your advice because you make $30,000 a year and you've never saved a dollar in your life. So what do you think of this idea? Really?
It sounds ridiculous.
Stop it! Stop talking to broke people about financial information. I have something I teach my students. It's hysterical. I tell my students, if anyone gives you financial advice, no matter what it is, the very next question you ask is, "Hey, are you a millionaire?" And when they say no, you say, "Thank you for telling me exactly what not to do."
You got to start. At some point, it's your responsibility to take control over your financial future, and nobody's going to care more about your money than what you do. And I'm not saying that to be harsh, and even just this conversation here today, we're not being mean or rude or about it. It's your responsibility. You have the control, and you got to make sure that you are putting yourself first and treating yourself as your number one asset, because if you don't, life's going to fly on by and you are just going to be a consumer to everybody else's story. In my opinion, you deserve it.
Absolutely. And you deserve it. You deserve to make more money, to save more money, to have more money, and to make your money work harder for you.
Hey, Larry, before we go, because I know we got dinner here in just a second, but your mirror in your office, you want to tell the community what that's all about?
So I have a mirror in my office, and it literally says on the mirror, it says, I deserve it. I walk by and I read it, and I go, I deserve it. There are times where I take students, they're like, I don't know, I say, come over here. I put them in front of the mirror and I say, read that. And they go, I deserve it. They go, no. Read it louder. I deserve it. No, louder. I deserve it. No, louder. I deserve it. That's it. That's what it is for you too. Once you realize you deserve it, you will have it.
Yes. And you just got to get over your own mental pathways and the blockages, I'm still learning my shit, being in your 20s, still growing up. I'm like, it is weird out here. They don't teach you about life in school.
They don't teach you much in school.
You gotta go figure it out, and you're going on your own journey. So, no, it's good. And honestly, y'all, so that's why I surround myself with people who are a lot more successful than myself and who are living the lifestyle that I want to live. Because I'm like, what are you doing? I don't want to reinvent the wheel. I'm just going to copy y'all, and you take me down the journey. So, like I asked you earlier, Larry, I said, hey, what are the mistakes that you're making? Because then I know what to not do.
Yeah.
So, Larry, where can people find you?
You can find me at LarrySteinhouse.com or InvestorSchooling.com. In fact, if you go to InvestorSchooling.com right now, you can take a free class this Thursday night, and we will teach you something about money. Every week we teach something different, and you're allowed to take a class for free. So come, InvestorSchooling.com.
Absolutely. All right, and y'all, I'm going to see you in Cleveland, okay? So, Ohio folks, I'm going to be out there over Labor Day weekend. There is an event happening right in downtown Cleveland. So, holler at me if y'all are local in the area, you want to grab a bite to eat, you have a cup of coffee together. I'd love to take you out. So, send me an email, hannah@themoneymultiplier.com. Hannah spelled the same way as forwards as backwards. And I'm going to catch y'all on Thursday, 9 a.m. Eastern Time, Money Mornings with Hannah. It's a live stream that happens every Thursday morning on Facebook, Instagram, LinkedIn, my YouTube channels. So you'll find me live on there, and we'll be back next Tuesday for another episode. So until then, thank you. I'll see you later.
Thanks, Hannah. I appreciate it.
Love you, man.
Thanks, everybody.
Hey y'all, if you've made it this far, this is where most people stop, and that's why they continue to be stuck with their money. Continue on with your education. Click right here. It'll take you to the next video.